10 plus startup loan options for new businesses as well as non-startups, getting 0% interest for 6 to 18 months and up to 150, if not 250,000 in business credit cards, as well as a combination of personal credit cards. How about installment/term loans, personal lines of credit, and much more? Welcome in. This is Michael with Viral Funding Solutions, and I have a treat for you today. I will be going over these 10 plus startup loan, startup business funding options for you. I have my laptop in front of me that I will be using as guidance. Not that I need to, it's all up here, but I do want to take the time to make sure I don't miss anything. So I'll be referring to it. That's why you'll see my face turn this way. It is Friday, so welcome in again. Let me know where you are tuning in from. How's your day going? Evening/afternoon that we already in, and perhaps you're on Eastern Standard Time, evening time, and or this week. So I'm an expert in what I do, guys. I'm an expert business loan broker, which is another way of saying that I can connect you with the best lenders, providers, organization, network, my internal team, best underwriters and lenders overall, amongst a lot of other things. And so this is what I do day to day. I'm able to look at the bank statements, financials if I need to, with myself and my team. With underwriting, I get feedback. I can communicate it with you. And why do you want an expert? Why do you need a consultant? Well, because it's harder to navigate what are the best startup options without fumbling, without making mistakes. If you've been there, you know what I am talking about. And I've been in your position. I run multiple businesses myself. I'm not only an independent business loan broker, this is my main priority, but I have a digital marketing agency, affiliate marketing businesses, and a few other ventures. So I know what it takes to get funding, credit cards personally and in business, government funding, you have advances, term loans, lines of credit, the list goes on and on. So no further introduction on that. I may touch upon the why later on again, but here's one option. Let's start off with the 0% interest for 6 to 18 months. And we'll close up here in we're going to try to do it in 10 minutes because it is a Friday. I normally just leave it open for people. I don't speak much, but I want to present this to you. So I sent this to a real estate investor earlier today who I've partnered with, who were helping a lot of clients as well, but I could have sent this really to anybody, and I've done it before. So you have what's called the credit line hybrid, where it's 0% interest for 6 to 18 months. And again, I'm using this as guidance. I know what's there. I can just say it from up here. But things have changed in the market where it used to be you want to have at least a 680 and above on all three consumer credit bureaus. Now, if you're between 670 and 680 or 670 to 690 in those cases, it's because you have high balances, high utilization that we'll have to focus on first, paying down with a payday loan or something similar. We'll find a way. You need to make your payments, make them much faster, make them much bigger, or whatever it takes to make that then reflect within 30 days or whatever time that is. So this is the credit line hybrid. You want to have at least a 700 and above on all three consumer credit bureaus. I know a lot of you in here are like, doesn't make sense. Well, the thing is, you can also get a credit partner. Get a guarantor, get a co-signer, somebody that can help you. They can take on the debt, but they are, even if they are liable, they can trust you. And you have to have that trust associated with them, even give them a plan on what you plan to do. You're not just go into it blindfolded and where they don't understand what you want to do and they don't have that confidence and certainty to help you. A joint account, whatever you are doing. So you can get a credit partner, you can get a guarantor, you can do the whole co-signer. I'm not going to get into the whole co-borrower, but there's associations to those, specifically also with other types of funding solutions. So with this one, you can get up to 150, if not 250,000 in business credit cards. We can even look at getting personal credit cards in combination of them in tandem. And what you can do is then liquidate the cash out of these 0% interest for 6 to 18 or so months, credit cards. And you can use that cash for any investments you choose. Real estate, I need a down payment. I'm purchasing that next multifamily. I need a down payment for this commercial real estate property. Single family, fix and flips. I have something to sell, something to hold on to once I create a construction ground up project or whatever it is you are doing. I do a lot of these every single day. Literally, guys, I'm getting clients funded as millions upon millions, just 500,000, less than 100,000. And I'm not saying that to be cocky. I'm not like that. I'm not at all. I'm a very confident and certain person in what I do. And I say that as in a way to show, hey, I'm doing this every single day. So that is a business credit card program where you can stack. Let's say you go to Wells Fargo and get an unsecured business credit card approval up to 100,000 with no documentation. Okay, now I can go get one with this other banking institution, this digital or offline bank. And so what you're doing is you're getting multiple cards, although it may show as a hard pull, they're separate accounts where it will be easier to get removed from, so it won't display as much or for that longer period as what you would think. So there are ways to mitigate these risks when you're getting business credit cards at 0% interest, and you want to use this money as good debt, not bad debt. I won't go on too much now on the credit line hybrid. Let me move on to the next one. But down below, I'll leave an option for you to check out this credit line hybrid, this business credit card program, this business credit card stacking program, and getting access to those as well. But 0% interest really quickly here, even startups, non-startups, true no-doc financing program, no financials, no bank statements. If asked for, you may have a business that's running, so we just need to verify something for maybe a no PG. If you get a no PG, it's very hard to. And a lot of these do require sometimes getting a business credit. When you're getting business credit cards, the personal check. But what's reporting is not on your personal, on your business is what you want eventually. Separating your personal and business. True no-doc program, no upfront application fee, no collateral requirements. You can use credit partners or a credit partner if you need. No cash flow requirements. Many don't report to personal credit. Some will, but not all. Depends on what kind of card, what issuer, what level you are starting at. I go into a little bit more details. Credit card 3 years old with $5,000 limit. Must be a primary card. Minimum of 2 open revolving accounts within a year and a half of good payment history. Under 40%, sometimes utilization of 35% and under on all revolving accounts, not just one. No more than 4 unsecured accounts open in the past 12 months. No more than 4 to 6 inquiries per bureau in the last 6 months, preferably less. No bankruptcies within the last 7 years. No unpaid collections, liens, or judgments. And there's a little bit more. So again, I can show you that. I'll leave more information down below if you're watching on YouTube. If you're here on TikTok and elsewhere, bio, link click, and then you'll be able to check out one that says personal startup. That's a little bit different. I might have one that says credit line hybrid, 0% interest, that you can learn more about as well. So I won't go into all of the details. There's more things there, but I'll highlight it to you when you see that. Number 2, you have the personal/business startup loan option. And this is a very popular one and more flexible and acceptable. More people go into this program and get accepted than, let's say, the credit line hybrid. And so this is where you can get a combination on the personal and business. And it is startup funding. Startups, non-startups are welcome as well. And you can realistically get up to $500,000. You can get it in a combination of installment loans/term loans, personal lines of credit, and or personal and or business credit cards. So see how we can combine all of them. Now, the contingencies, I'm not going to go into it all because again, I'll have a separate content down below. That'll be a different program, which by the way, if this is your first time or maybe you've seen me sometime, there will be a questionnaire form down below. That's where I would begin. You can see these options. I may not leave them all individually, but in that questionnaire, fill it out. I'll be able to evaluate, analyze, and give you a proper response back via email on your best funding option and options, thoroughly broken down, very personalized and highly customized. I've been doing that today a little bit. I'll be catching up more tomorrow on a Saturday. So please check that out in the description, in the bio as well. And that's the best form of contact. When people say, how can I get a call with you? I can't just be taking calls or giving calls. This is a way for me to see what you bring to the table. It's very confidential, safe, and secure with me. It's not an application. I'm a pre-underwriter, guys. I can see what the underwriters want. I know what the best ones are looking for. If they see business credit factors, they see poor financials, if they see sub 650 or so credit, or what other issues, maybe it's a location issue, I get all this feedback from the underwriters, and sometimes you wouldn't know that by yourself. And some things they can't always give me. But you can get a lump sum in an installment loan, a term loan, if you have at least sometimes a 650 is doable, but it's much harder, especially in this market. But you want to have at least a 680 Experian, but better 700 plus and above. And we're just looking at a soft pre-approval for Experian just to see if we can even get you a range of, let's say, for example, 50 to 100,000. If you have verifiable income with your personal tax returns, we want to see usually 2 years, sometimes 3 we ask for. And if you have business tax returns, it's helpful. It'll definitely help a lot. Not that it's always needed and asked for, especially if you're a startup with no business tax returns. You may be only be verifying by pay stubs or another form. And I get this stuff all the time. And so we might say, hey, if you have verifiable income of 50,000, we can get you, or 100,000, we can get you approved between 75 to 200,000. And it's based on debt to income. So when you're looking at these credit-based programs that we've spoken about recently, this is what we're on, credit-based. So credit-based, cash flow, or revenue-based, and then you have collateral. We're on credit-based, the credit line hybrid, credit-based. Personal/startup loans, credit-based. And so what we're looking at here is a 680 and above, 700 and above on FICO Experian. And if you want a personal line of credit, a lot of the times you need to even have stronger credit history. You need to have at least 2 on the 2 of the credit bureaus, or the 3, you have to have a 700 and above. And if not, they'll ask for 3 from where they're pulling from. Not only from Experian, it might say Experian and Equifax, it might say Experian and TransUnion, Experian or Equifax and TransUnion, but a lot of the times it's coupled in with Experian. And certain lenders are not created equally, guys. So when you guys go to a startup program, somebody will ask you for 3, you have to have 700 and above, or 680 at a minimum. Others will say, hey, we can get you in with 680. And so what are the parameters to it? And those are things that I can communicate with you on. So what I recommend, again, like I said for this option, I said it to this person, get a guarantor, credit partner, cosigner if you need this to work. Best option for stretching out your terms and lowering your rates and helping if your depositing frequency is not every day or every other day, like let's say a restaurant or a retail business. This will help you. And what I mean by that is, hey, you're a trucking business, for example, could be any business, construction. I only deposited once at the end of the week. I didn't get paid fast enough. I needed bridge money. I needed working capital. My depositing frequency is not every day. It's not every other day. It's not every 2 to 3 days. It's more about every 4 to 5 or so by week. And so you may be able to afford those cash advance term loans, but at the same time, what does that do to your cash flow? If you have to take those and take a temporary setback for a bigger comeback, longer term, then you do it. The benefit has to exceed the repayment, and you have to look at that and making sure that you can sufficiently take on what you have. And you only know that by your pattern, or if you don't have a pattern of doing things in business already, you know the market. And then 2, you understand your finances. You might be wearing multiple hats, but you got to take the time to do that, or you hire somebody else that can help you. I know when we're just getting started, we don't always have that. But that's a good way to do things. I have the details here. 50,000 in annual revenue, taxes or pay stubs verifiable. There might be another way too. 0 time in business, but it requires you to have at least 5 trade lines. Yes, you got to have the accounts. If you don't have the trade lines, the mortgages, the auto loans, the student loans, any other loans you've taken out and paid for and shown us sufficient history of it, and a lot of the times these lenders want to see more than 2-3 years of it. And even if not, we can still work with these, but you'll have more of a thin credit profile and you may not look as credit worthy to the lender. So 20,000 to 500,000 in approval amounts. The term loans depend on what you get. You might only be able to get between 20 to about 300 or 350,000 on those, sometimes more, and we can space it out sometimes between 2 to 3 or 3, 5, 7 year terms. It just depends on the file, depends on the funds, depends on everything. And so that's what we'd like to see, at least a 700 in Experian. We can work with the 680, and the major difference between 680 to 700 is the balances, the utilization. We might have to pay off first. They might not accept it if everything else isn't looking good, like these things I'm going to mention in a moment. 6 to 18% cost of capital, or in other words, interest rates is what you see. I see a lot of 7 to 15%, but it's not to say you wouldn't get it any higher. I'll go into the comments in one moment. Appreciate you. Thank you. 24 hours is the soft pre-approval. So when my team gets this, guys, you guys got the best. And I'm not again saying that to sound like I'm not like that. I'm saying this just so you know, and I might speak about my story later. I'm an introvert. I'm a systematic, very mathematically programmed person. And just think about, like, you have a silent partner. If there were 2 people or more, I'm the silent partner. I'm probably the one doing all of the systems and the system engineering and iterations. I love that. back end, but I do a lot of the front end, as you see here, because who else is going to do it for me unless I hired somebody? But I want you guys to see the true value of an introvert in this space who has a digital marketing background and affiliates. How is he even in this space? Because I have my processes, my systems, and automation. I've shown that I can do things different in this space than what everybody else is doing, and I won't yap in your ear. I won't butter you up like other people do, overpromise, underdeliver. So 24 hours, we can look at a soft approval. I get feedback from my underwriters. I can come back to you. I can even email you, say, hey, I have this from my underwriter. If you have I did this today to multiple people. If you have verifiable income of this amount, we believe we can get you between this amount. And this is what the lender saw or the underwriter saw. If you have that, can you state that you have that? And if so, can you please share with me your personal tax return or returns, usually one, the most recent. And then from there, I review, and then I go with my team, my underwriter, and we review. And he gives me the green light, or she does. I already can see it. But if they do that, okay, good. I can come back to you. We schedule an appointment, about 10 to 15 minutes. It's only with you and the underwriter usually, or that person. And then they just go over a few things that I have already explained to you, but they might just go into a little bit more detail that they want to make sure on their part they're doing. So 24 hours. Do I give loans worldwide? Not necessarily. I know there are options out there for like UK, Australia, and things like that. But right now, what I do mostly is United States, all states. You're in good hands. Corny, I know. But that's the old man in me. I'm an old soul at heart. But that's the old man in me. I'm an old soul at heart. United States, Canada, Puerto Rico, the majority. And I know people contact me and they go, "Oh, I'm not there," and there's cases, and I'm gonna get there. So you're guys gonna hear the very good stuff in a moment. Like, what happens if I'm in the Philippines? What happens if I'm somewhere else outside of the U.S.? That's not those states or those places that you just named. So I'll be getting into that. I'm working on a lot of this stuff with like venture capitalists and a lot more. So right here, we just went through the personal/startup loan. So it is on the personal side. You guys have to be aware that if you don't want debt showing up or you don't want that taken onto your credit profile, be very cautious. Understand, what is my opportunity cost of taking this funding? Yeah, I might endure that credit or that debt that shows that way. And there's a hard pull usually with personal loans. So yeah, you may have some points that go back and it shows as a hard inquiry. But just understand the leverage. If this is something where you have a plan for your startup, or as a non-startup, you're like, I'm going to triple. I'm actually going to double it first in the next 2 quarters. I'm going to triple it in the next 2 to 3. And then from there, the next year, I plan to do about 4 to 5 times that amount, or wherever you go. You got to look at that and have a concrete plan. You might just use this to save money, consolidate credit cards, and you're looking at mortgage payments, you're looking maybe at sub-2s, maybe you're taking on a mortgage from another real estate investor, there's seller financing involved. There's so many scenarios, guys, but just understand that the benefit exceeds the repayment. And the other alternative, just so you know, if you're a non-startup and you're looking for revenue-based financing, right? Credit-based, revenue-based, collateral, revenue-based. The difference with unsecured revenue-based financing is it may not show on your credit. Usually it won't. So it won't have any implications that way. It shouldn't drop necessarily the score, because a lot of the times you see a soft pre-approval, there are certain lenders who will say, hey, if you're below 650, we may need to look deeper, but we'll ask for your consent. We'll ask for that anyways. And that's fine sometimes. And you got to look at the opportunity. But with those, it may not be reporting to those personal and business credit bureaus. So you look at it and go, that's actually protecting me in case anything goes wrong, in case I can't make that payment and I have a personal loan. Now that the personal loan is actually showing all that debt the way it's showing, and if something goes wrong, my family, my assets, I may declare bankruptcy. So it just depends where you are in the whole outline. You can't just say, well, I don't want that to show, but the opportunity of taking that funding, it's each to their own. You understand your business, or you understand what business you're getting into. And everything else you can't qualify for. Revenue-based, you don't have the revenue for it. You're not going to get enough there. You might get more over here than you do over here. So you got to leverage. You got to ask yourself which ones are beneficial. And I'll be releasing another video soon on part 2 on personal loans versus merchant cash advances and cash advance hybrids. Look out for that one. So 24 hours, 1 to 2 weeks, time to fund. So 24 hours, it can take 3 to 5 weeks sometimes. but 1 to 2 weeks we could see very quickly. Soft pull initially for pre-approval to get hard offers. It's a hard pull, which is standard. You can decide then if you want to move forward. Note, the origination fees though on these, as well as some other ones, especially with the credit line hybrid, you can normally see between 9 to 11% success fees on the total amount of credit lines we got you. Or you see on these personal loans, as well as the combination of the other ones, you see about a 15% origination fee, or you can call it sometimes a success fee, which I get. You're like, whoa, that's too high. Can we render that? We may be able to drop it to 12% more or less per case base, but think about it. You walk into a bank, whether you can or can't get one, they approve you. Oh, you get 10,000 personal loan, term loan, installment loan, lines of credit in total. You only got 15,000 if you could. But over here, with my expertise and my lenders and my network of who I know, because you're leveraging that. Not everybody's the same. I know the internal teams, the underwriters and all of that. So over here, we say, hey, we can get you between actually 50 to 100,000. You were only going to get approved 100 or 10,000 here. We're going to likely get you closer to 75 to 100. We say 50, but we can likely get you 75 to 100 or more. So you look at that and go, max funding? And the banks already work this way. Can I find maybe a private lender, a fintech company that can do that? And we'll look at those options. It's not just the bank. We look at also credit unions, of course, but we look at private lenders who have this money that are willing to give it to you and they're willing to work with you. And even if it's a 15% origination fee, you have an extension of 1 to 5 years. The payoff is much, much greater than what you see. And that's not even a con. The 15%, you just got to look at it and it's per case based on what you get approved and what you're using the funds for, and how long it goes out for. And the benefit exceeding your repayment, and it's a great alternative if you would like to have that on the personal side, if it's personal stuff, then to a cash out advance because of the interest or the factor rates, 1.19 to about 1.7. Now you can say that's 19 to 70% interest, but it's not necessarily the case. There's a difference. And those aren't amortized. Those cash advances are not amortized, so it's not based on interest rates. It's based on future receivables. It's a bit different. So important details: have less than 35% utilization, minimal recent inquiries, strong credit history, no recent negative items, based on debt to income. Try not to have too many recent new trade lines. Oh, there's a little bit more. So I'm going to just leave it at that, but I'll link more information down below. If approved, pre-approval, post-approval, I have all that information here. I won't go through. Let's go to the next option on what we need to be supplying for those in certain example scenarios, but it's different per case. Now, there's another personal funding startup option, and that's why it's important that you look at the questionnaire. Submit that questionnaire, guys, because I may show you one, but I usually will show people multiple like lenders on the personal business collateral side. So I will say, hey, I'll show you 3 of those, but the first one is the one that I'm going to position it and go, that's the best one. And the reasoning will be very, very clear when I describe why. And so that's what you want to start with. So you have grants, microloans from the SBA up to 50,000 up to 35,000, but those are harder to get right now in this market. Let's be honest. I've had people go through it and they come back to me. It's not even done in a month, 2 months, not even 3 months. Like extension 6 months and above it can take. I've seen these. So any kind of grant opportunity, those are also great for startups. Certain non-startups, not all of them, but it just depends. And there's not like always one exact technology grant. Yes, there are on each specific, but there's some that can encompass all types of industries. SBA microloans, I put that there. The SBA Community Advantage Program, that's another one. I'll go to the comments in a moment. Appreciate you. And I've been seeing you. I know you've been in here for a little bit. Appreciate you. Thank you. And so the SBA Community Advantage Program, it could be based more off of business liquid credit in some cases. It's a little bit more provocative or a little bit more difficult community, the whole wording behind that. It's more to sections of specific counties, cities, states. It could be a lot harder because of the location you are in. Location is everything today, guys, not just in real estate. It is crazy hard. I just had to decline. We declined we didn't really decline, but we gave them a lower amount. They were being declined for other options from higher tier lenders for revenue-based financing. And they couldn't do invoice factoring or account receivable because they already had a company. So I shared with them earlier different options, but they were getting this approved for location reasons, industry and location. And they didn't like that. The lenders, the underwriters were mitigating that risk, and they said maybe in a different market. And this is a business owner that's generating well over 20 million in annual gross revenue, well over. And they're doing upon millions a month. And it's just unfortunate. And it's also the industry. They're over leveraged, credits, a lot of things. And so it's difficult. So we're exploring right now other options if they don't want to take what they can get and put it to work. And so SBA Community Advantage, a bit different, still hard. Angel investors, guys, I'm doing that. I've been working on a few clients today with getting them set up with angel investors. It's such a great world without going into the actual requirements because each of them are different, and I'll spend a lot of time on that if I did. But pretty much you can get something from these investors that I can connect you with, that they can give you what they have, and they can source it from other channels, from other investment communities. It can work different with certain angel investors. They have their own parameters and they have their own expertise and how they develop getting that funding to help you with it. There are different ways. It can go on and on. But you also have, and I put here just a quick brief interruption, I put fixing increase your FICO credit score or scores resource. Just use this if you need to. And you can use something that isn't credit repair. It's just resources that I created already on the channel and other places. And then I have credit repair. If you guys need credit repair, you want to lean in with yourself, you can't rely on somebody else's credit, I really need to get this up, then I'll leave that option as well. But if you fill out the questionnaire, I'll show you that. And I have one of the best resources. I used to do this stuff myself, but because I want to focus on the funding, unsecured, secured funding on other aspects, I'll leave you guys that option. Great person and individual I have a personal and business relationship with. It's really strong. And so I have all the details. I'm seeing it right now. And I'll scroll down. Building business credit, and right here I go through wanting to build your vendor credit, getting established with places like a Granger, a Uline. There are so many creative solutions, auto loan, auto parts. There's so many different for digital web-based solutions, for other products, for your construction, trucking, medical supplies, whatever you need. That's a great addition that'll report to the business credit bureaus. It depends on which vendor you work with, and getting net 30s, net 60s, net 90s, etc., net 45s. Not so much of the net 15s, although those can work in some cases, but we can look at that. So over here, now we have, sorry, I was getting a text from one of my, I think it's my real estate investor friend. I seen the number and I was seeing what he was putting down, but he was interested in crowdfunding, so I'm gonna send him a message back here soon. And so business credit cards, getting those will be very helpful. I spoke about that with the credit line hybrid earlier, so I won't touch upon it too much, but I give you guys a perspective on those and what they can look like and how to get approved for them and what you should do and shouldn't do and what it takes to actually get these kind of cards. So I speak about that. Maybe transportation cards, I have that right here, or gas cards. Home equity line of credit, home equity loans. I won't go any further on that. We're going to speed up through these, but it speaks for itself. Now, it's hard for certain people with subpar credit. You want to have like 600 and above. Bad credit doesn't really create a good case for you. I guess, and you could say this with different banks, it's different. It's because it's a per case basis, and it can be something with overutilized, too many late payments and stuff like that that they won't want to have you have. So just make sure you have a 600 and above. In this market, I would shoot for like a 650 and above. Of course, 680, 700 and above is better. 401k IRA financing option, as well as stocks. That's a great place to start. So if you want to pull K IRA financing option, as well as stocks, that's a great place to start. So if you want to pull from and do a rollover, maybe into a new account, a separate account, we can work on that. 401k, we could do a rollover. You have IRA, of course, financing, and there's a few different sets there, IRA Roth accounts, and a few things that we can and can't do at the moment because of the market and things that the lender's willing to take on and the person. So we could do that. There's also the alternative, which are stocks, mutual funds, bonds. I'm working with people on that, financial security bonds. There's so many of them. But if you want to use those public stocks or whatever they may be at, we can use them as liquid assets, turn them into collateral, and then get you an equal amount to that, or 80 or 85% of that amount, depending on what the situation is, and then we can work on that. So 401k, you have a startup, or even as a non-startup, You have to look at the pros and cons to that. Again, home equity lines of credit too. Look at the pros and cons to it. Of course, you don't want to put things on the line if you don't need to pull away from your home, unless you absolutely needed to. Like right now, a business owner who I'm going to be helping getting an SBA 7A loan, really cool person, responsive. He is getting a home equity line of credit as we speak if he hasn't had it already. And he's going to come back and get an SBA loan with me, a startup SBA 7A loan, which I'll get into that, which is the next point. So SBA 7A startup, that's a great option as well. So this entails quite a bit, so many hurdles. But you want to have at least 25 to 30% equity injection. And that doesn't mean just down payment. That means not just overall project cost, but overall total transaction costs. And it's going to also be a predicament of the cash flow that'll be alluding to not only short term, but longer term, because they're giving you up to 10 years amortized. Sometimes up to 25 years, including with real estate, if possible, but much harder to, especially for franchise acquisition or non-franchise acquisition loans. The experience severely matters. You can have the injection of equity that you need, like this other individual that I'm helping, he has the equity injection. He has other practices. So in an ideal world, you want to have that equity injection. There's so many ways, but you're going, well, if I have multiple businesses, I already run in a vertical field. It's not horizontal, it's vertical. So I already have experience in this industry, which they're going to look at and go, yes. And it's not horizontal, it's vertical. So I already have experience in this industry, which they're going to look at and go, yes. And if you don't, it's not necessarily a decline, but if you don't have operational management experience, if you don't have the product development, if you're not in the trenches and understand your stuff, the business plan doesn't look good. It doesn't show us cash flow projections. Who's going to be on your team? What are they doing on each part of the business? Product development, finances, who's all on this? They want to know what team you have. That's what venture capitalists primarily want too. They want to know who is on your team. That's a big emphasis. Market fit, product market fit, team. And there's a lot more that they go in between. So right here, and I have the best lender or lenders for this situation in your industry. That's why it's important you guys don't just go to the SBA side or lenders for this situation in your industry. That's why it's important you guys don't just go to the SBA side, where's my preferred. People will tell you have the contract or lenders for this situation in your industry. That's why it's important you guys don't just go to the SBA side, where's my preferred. People will tell you that, but contrary to popular belief, you can't always do it, and I don't recommend doing it that way because it can run into a lot of discrepancies. They don't understand your. It's just outdrawn. Technology is not always there. Be very careful. So here I detail more. Stronger credit matters though, 675. Sometimes we can get in with like a 660, if not more or less. But stronger credit does matter. I'll be closing up here, guys, in a minute. Not exactly a minute, but soon. But I'm going to try to speed through these quickly. So I have more details there. I'm showing them that option. And then I'm going to go past this. I give you guys a business plan on what you guys can do, principal and interest, some ballpark numbers there. That could be something in your scenario. Over here, the documentation, how to get started with your application, how I require that. Equity crowdfunding. This is a great option. This is amazing. I'm actually going to click through this. I already know how this works. But it's a great program. And it was advised by Shark Tank's Kevin O'Leary, Mr. Wonderful. And this is just one of many, but this is one that I would definitely jump on. And a lot of business owners are. And this is one you probably never even heard of, or one that you don't even like, what's crowdfunding? Or what is equity crowdfunding? And so there are separate investors, people from a community that are willing to give you money, and it works a bit different. I'm not going to get into the whole parameters of equity crowdfunding, not equity crowdfunding. But you can work within a community. You can raise money for what you need, the capital. And certain people might take a percentage of that. Just depends on what people are doing. It just is different for each one of them. 1 second. Let me speed through these guys. I want to get through the material really quickly. Please hang in there with me. So equity crowdfunding is a great one, and I speak about the details of it. It's right there. Another one, Kickstarter or Kickstart. You can go through there. There's another crowdfunding program that works different too, that you can raise money and people can help you with that. There are other crowdfunding platforms as well, but that's a great one. Venture capitalist options. You can learn more about certain ones. So if I know you're in the technology space, maybe you're in the construction space or whatever it is, I can connect you with the right VCs. Maybe there's multiple, but I say, hey, there's this one right here. Reach out to these two. Or, hey, just reach out to this one. And then this is what I want you to do when we're going to do a stack deck, or there's other ways, a pitch deck, you can call it. Stack deck, there's multiple ways you can name this, but pretty much you're going to pitch if you would like to. You don't have to be so open about everything, but just give them something short of an intro, get into a few things, and then if you have a business plan, that helps. Have a business plan. So I've been looking at people's business plans lately, and they are startups, and so I go through them and I go, yes, this looks good. This is what they would like to see of. So make sure you attach that to the email along with this stuff, and I'll give you some examples on how to put a pitch together for your specific needs. Here's more about it. Other VC and angel investor options. I may have a bundle of it where you may get a database. Here's more about it. Other VC and angel investor options. I may have a bundle of it where you may get a database to these VCs, these angel investors, and more in specific locations. ROI on that. Other options, margin account, financial guarantee bond, and I'm going to speed through these ones quick. Equipment financing option. If you're a startup looking for equipment, if you meet what you need right here, it just depends on if you are a startup or not. Sometimes they require, A-tier lenders would require a 700 and above. You have a home mortgage or something similar to that. Sometimes a 650 is okay. In other cases, we can even go lower. But what ends up happening is your down payment becomes even greater. And if you can't, you're going to have lower terms. Your rates are not going to be as great. And just understand that. And that's just the case. When you don't have the credit profile and you don't have what you need, it's always going to require a higher down payment. So there's more details there. You can get that as a non-startup. More equipment financing options I have right here that I stated. Like I'm showing you guys. Like I say, this is what's best. Don't do this one, but I'm showing you it. Just don't do it. It doesn't make sense to do that one. It won't work, or it's just not best. Now here, there's another A tier. And pretty much that covers it. And I know there are more startup options. We can go into a lot more with private capital. We can get into private equity. Of course, I spoke about venture capitalists, hedge funds. The list can go on and on. Family and friends. It just doesn't stop there. You can get so creative in this industry. So let me go to the comments right now and make sure I didn't miss anything though. No, okay. Good question. Any SBA loans to relieve a high interest loan? Yes. And you heard me say it today, the SBA 7A loan. That's what I would lead in with. That's ultimately the one you want. And I'm saying this, cash advances, term loans, personal business credit cards, more so personal cards. But yeah, I get the scenario every single day, guys. Every day, like literally my inbox gets flooded. And that's a good sign. That's a healthy sign. And I remember people. Don't think because I get a lot, I don't remember these people. I remember people. I spoke with somebody today, great conversation over the phone with them, and I remember their situation. I remember them as a person. I remember when they were getting in contact with me. I remember what they were doing. So I care for each person. But SBA 7A, consolidate, refinance. If we had to refinance certain scenarios on that, I won't go in depth, but it's a lot. And then we put it all underneath one term loan, a lump sum primarily, working capital, expansion reasons, whatever it is. Then we can work on that. Martin, do you mean how to join my culture or my ecosystem? Bio or description, for those of you watching this later on YouTube or elsewhere, click the questionnaire link, should be one of the first two. I'll leave also the personal loan options, but the questionnaire is the one you want to fill out. It's been a long week, guys. You guys are probably like squinting. And I squint usually when I'm reading something or when I'm like really trying to soak somebody in and really get to know who they are before they said a word. I'm a very analytical, observant person. Like I read people like that. And I know who I want to and don't want to work with. So people who waste my energy and time are those that I don't want. We leave that out the door. When that happens, we leave it out the door. Sure, you might have some character flaws, you may not. But that's what I see get in the way. Character flaws, personality traits, some things you're stubborn, maybe arrogant. We leave that out the door. Flaws, personality traits, some things you're stubborn, maybe arrogant. We leave that out the door. With me, I don't accept that. And so you leave that out the door, and I'll take care of you. Don't worry. I'm not going to pressure you. I won't do none of that. Like these people who are in your ears yapping, "Hi, Mr. or Mrs. I heard you were looking for a loan. I see you were getting..." I never answer those calls. And if I ever do, it's because I thought I saw the number correctly, but it wasn't. Or it's just, let's entertain it, which I rarely ever do. And so I just go, no thanks, not interested. Like, I get they're trying to probably build rapport with me, but that's not the only way. Like, let's be honest. So, those are the options. I think I'm going to conclude here. There are multiple options as well that we can try to combine. So, for a combination, like you say, you get an SBA loan, then we can try to work perhaps on the credit line hybrid where you get multiple business credit cards. And then you have an SBA loan, or you have a hybrid cash advance. Well, you had a personal loan, but you got a hybrid term loan or hybrid cash advance, and you got, let's say, $150,000. Now you're taking that and making payments on the personal side, and you're lowering that down. Your debt is being cleared or much lowered. So it just depends on what you're trying to do. We can do bridge funding, get you term loans, lines of credit, unsecured financing. In the meantime, while getting you approved for an SBA loan, we can do a collateralized solution with an SBA loan on top of that. Just depends on what you want and what you can qualify for. Like right now, like I said, I had to pivot from a client of mine who's not getting what he wants. And so that's what we saw in underwriting. And I brought up to him the solution. If you have real estate, which he mentioned not too long ago, which he has something with real estate. So I'm going to ask him, and I did, do you have any commercial real estate and or developable land? Here are the parameters. If so, we lean in with that. If you don't, guess what? You may need to get a guarantor. Get a credit partner. But my pride, and do you have a co-signer, somebody in your business, somebody else that can help, or your spouse? You guys are jointly filing returns, etc. Or what can you do? Who else can help? And there's some other options too, but it's much harder when you don't have the credit profile, or something derogatory, or something of a late payment just doesn't help. Or you have so many other things, but you have to also look at the benefit exceeding the repayment. You are most welcome. Sounds good. Does anybody have anything? I do have to get going though. I'm quite tired. I'm going to go on a jog. See you guys, have your routines. Health is number one. To me, health is everything. I'm just tired at the end of the week. That's it. Old man going to bed at 8 o'clock today. No, maybe not. For a new LLC, congratulations too on getting your LLC. I know how much that can take. And then just getting the foundations, not only just your LLC, but state of incorporation, articles of incorporation. There's more to that. Different names they even call it. But there's so much that needs to be addressed first on the foundation. And this is the important part, guys. Have an optimized profile. It's not about saying, hey, I got a 620 credit score, I'm going to go get a business credit. Yeah, you can try to get a business credit card at that amount, but it doesn't mean that it's going to be optimized credit to get you enough of what you need. And then that's going to hurt you when you have a hard inquiry, and then we see your history and you have never even increased your credit. So it's just a lot on all of that. But yeah, I already talked about the startup options. For those of you who know. But I'll get going here in less than a minute, unless anybody has anything they would like to ask. But yes, funding options are funding galore. From personal side funding, if you need to business credit cards. You have the equity crowdfunding, normal crowdfunding. You have the SBA 7A loans, equipment loans. The list goes on. And so it just is about me figuring out what is it that you have, so that I can say, hey, this is actually our best option. You have 2 options, you have 3, you have 4, you have 5, maybe 1 or more. But I go, this is where we should start, and this is our roadmap. This is first, we got to look at getting these credit cards. And I have my own document here and things that I've done myself. So let me move this and try to open it. But you can go to different banks, and sometimes you have to go into a bank to get these business credit cards, not just solely apply for them online, because the relationship, you have access to a bank manager, or you have somebody who can help you in that relationship, that they can say, hey, I know you, I can actually get you more funding and do a lot more. So sometimes you got to look at it from that point of view, and you have to sometimes show up. This is taking a little bit longer to load. Here it is. Yeah, but here I have my own stuff that I've done, and then lists of how you can get these business credit cards. And once you come into my ecosystem and my team, I'll show you guys on what's best. Like right here of what I've received and also what I've helped people receive. These are just some past clients and things that I've done. So like Chase Business Inc. with 0% interest card with an Experian and TransUnion pull. So no Equifax on that. That may play to your advantage. Banner Federal Credit Unions. There's the FDU. There's the USAA. There's a few things that we can look at for banks where we can get you easier funding. And then there are more solutions available. And there's certain parameters to each one of these. Like with Wells Fargo, we can do a specific one with US Bank, maybe a key bank. It just depends on what you're looking for. And then some of these require no PGs, like a US Bank, but you have to have a fully optimized profile. And they would require you to have 2 years time in business. And there's more to it. And some of them, you have to build a relationship. It's very strong with like an American Express, where if you have your in the door, you're next in the door, and if you can request an increase even sooner sometimes, and a lot of these you see about 6 months, you can ask for a credit increase. And there won't have to be a hard pull on those. It's just a soft pre-approval or none. And they just see that relationship and you go, you've been using those cards. I've even been doing a bank transfer where I liquidate the cash out of them. I probably put them into checks first before I then deposit them into my account. See, that's another way. There are multiple ways. Sometimes you get a portal, kind of like a business line of credit, or you could do a bank, a transfer or wire transfer from your cards from one account to another. You can put them underneath your personal side, onto your business side, whatever it is you need to do to use those cards for certain investments. You are most welcome. Appreciate you. Thank you. 30 more seconds. Does anybody have anything? Like I'm looking at a profile right now, submitted 50 minutes ago. I haven't taken the time to look at it, but from a perspective like this, I would have said a quick, see for working capital, I would have said we can try to get them a 10-year amortized SBA loan up to $150,000. Now the amount that they're requesting is fairly low, so it won't work. It probably won't be best. And the credit profile is not what the lender would like to see. They do have the business credit though. Yeah, and if it's the construction of an office or a building, it'd be much harder at that micro loan or that express loan scenario. But I see what they want to do. Okay. So he probably hasn't paid off 50% of, he has an existing advance. See, this is the problem when you have an existing advance and you want more, but 50% of the balance hasn't been paid off. So him getting the amount he's requesting is more than what he got for his first position. You're not going to get more than that. You're likelier to get between 7,500 perhaps to 12,000, if any. And it's been probably over a month or two. So that's a projection of more than half of what he was asking for. No. Yeah, PPP loan. And I know that I have the title. Sometimes I forget to change the title, so I apologize, guys. Long day. I'm tired. I'm going to get off here. But yes, PPP loan and then the alternative, which is, oh, here's another one, by the way. The employee retention credit, up to $26,000 per employee and a refundable payroll tax credit. Jump on that now before it runs out, 2024, 2025, and you're living in regret, because I'm telling you, a lot of people are using this program to get a credit back, payroll refundable tax credit, before for being able to retain those employees for things out of your control during COVID, different than the PPP. So I'll leave that down below as well. Many people are jumping on top of it. And I have my portal, I have my payroll management experts who I work with all the time. A long week. I'm still not done. I gotta leave here. A long week. I'm still not done. I gotta leave here. Anybody else? What is it that you are trying to do? Then I can give you that answer. What is the thought process behind that question is what I want to know. So it just depends on different regulations. Not all the time, but without knowing more of your case, and I'm at the end of the video here, guys. I know this would probably be something we'd be talking about. With that form, you would have to, the majority of the time, if you're doing that. But again, like I said, I have to have a better background of what you are trying to accomplish because it's different for each and every person. Does anybody else have anything? Like I said again, and these are the things that I recommend you guys send me an email or fill out the questionnaire and then put that in the describe your request field. And once I know your business better and I understand your overall goals, that can align with what you're trying to do and what you're trying to secure. Yeah, the ETF bonds? Okay. Got it. I've been doing a lot of bonds this week. Financial security bonds, a lot of them. And stocks, open stock bonds. There's so many different directions to go with this, with what you could get approved for. And even some of the things that I've been just learning more of, because the stock world isn't necessarily my butter, I guess. I do all services, but it's not like I'm always... I do all services, but it's not like I'm always like in the stock world necessarily, or I'm not on these types of bonds. And it's so crazy what like I discover sometimes, and you only discover it by experience. And right now I'm also working with a lot of real estate investors, and if it wasn't for who I am, somebody else probably wouldn't be able to do what I'm doing. Yeah, the green bonds build back. Yeah, there's different types. We can get into all of them, but it's hard. It is very hard because a lot of the times that might be somebody's last resort. And that's what I'm working on with someone right now. And it's like, oh my goodness. And I know who to connect them with, because of my resources and who I know, how they know me, or not always know me, but I know somebody because of somebody. But it is difficult. It is like sometimes beyond like what people ask of me. You guys got to be honest. Like I know the stuff, but the thing is, there's some things that don't exist. And you guys are looking for like no PG, 0%. I've had people come up to me and go, Michael, can I get 0%? I want nothing more than 12 months, and I want $350,000 in a business loan. Is this Navy Federal? You did hear the part about where it said loan, right? So you want 0%? Oh wait, you want me to start? You want me to go to my underwriter, my lender, and say, can we start the payments a month from now? And so there's all these little contingencies that happen, right? And these unrealistic expectations, we just are not educated. I get it. I'm not going to bash anybody. I never do. But when I look at them and I go, yeah, I really do need to help them. It is. And I'm sure you know your stuff, especially with bonds, more than I would, specifically with the experience you have with them, more so. But the thing is, when we are like, we want an SBA loan, but I don't have an equity injection of what did you expect? And that's still not even enough. What the SBA will help guarantee and back, it's like we got to meet here. And then there's post-closing liquidity. You don't have any equitable collateral. You don't have the experience. Like, your credit is shot down. Get a credit partner. Your credit is shot down. Get a credit partner. Your credit is shot down. Get a credit partner. That's ultimately what people should be doing. If you can't qualifications, I have a video too. I walk you guys through the application from start to finish. Some things may change a little bit, but the fundamentals of everything is there. Payroll, tax documents too. I walk you guys through the application from start to finish. Some things may change a little bit, but the fundamentals of everything is there. Payroll tax documents, quarterly 941s, X amended, and all of this stuff that we do. But the fundamentals of everything is there. Payroll tax documents, quarterly 941s, X amended, and all of this stuff that we need to look at. So this is stuff that we go through in our back end with the payroll management experts, myself, and everybody else included. The Treasury Department. Yeah, there's verifiability on all of these guys. So the IRS, Treasury Department, all of these, there's so many regulations. And then the market, we're kind of out of this. There's so many regulations. And then the market, we're kind of out of this. And so interest rates are going to be climbing likely next month to about maybe the end of next month or maybe the end of this month, but more so up to about 8 or so percent, if not at the end of this month. I'm projecting that to happen. Maybe in the next month as soon as that. So interest rates aren't really necessarily the problem. It's just how you guys use your funds. From one person using it for growing and expanding their business to somebody who just using it to use it for emergency funds, like they won't be able to justify. Like I needed emergency funds for 8 months, Michael. But I'm going to use it for something else too. But I don't need to. It's just they're trying to work something that won't exist. And it's just, if you can't put that money to work, if you can't take 100,000 and then turn it into 200,000, paying back 130,000, or just making 100,000 and then turn it into 200,000, paying back 130,000, or just making 150,000 on something like that. Can you do that? And even if you can't, it doesn't mean it's not good. Just understand your cash flow. Don't go into a deficit. And if you do take a temporary setback, flush it out and go longer term. Good question. Good question. Excuse me. The best low interest, I'm saying it like I'm a French. See what happens when I get, as an introvert, when I'm speaking more? That's what happens. I've even seen my voice kind of go out. Probably seen some of you guys have witnessed it. Hilarious. If it is not funny to me when it happens, but when I look back on it, I go, that really happened. But the thing is, when we're looking at low interest rates, small business loans, good question. And I think I've released a video, or I'll be releasing it soon here for 2023. I know I've released it previous years too. And this is stuff that I made, guys. And I'm very transparent with you guys. I know my stuff very, very well. Very, 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 like, above all people, a lot of them, right there. And so looking from that perspective, the lowest rates, I would say, are these term loans, or in other words, account receivable financing. Or you can call 504 land or development loans. Those are even lower in some cases, 4, 5, 6% you've seen with 504 loans, with certain real estate additions. But right now, you're seeing the bank loans being equivalent to private lenders and private investors. And the lowest account receivable invoice factoring, we can do prime rates plus about 2 to 3 or so percent. So we could do about 7.75 plus 2%. So getting you into the later 9%, early 10s if needed. And that's a good addition because, hey, you're seeing SBA standard SBA 7A loans from 350 to 5 million, approvals from 7.75 right now, or prime rates. We'll say prime rates because it'll change depending on when you watch, plus 2 to 3.75%. Sometimes I've seen 6.75. Anything underneath 350,000, it becomes more expensive. And so when you get these standard SBA 7A loans, let's say you did get 2.75 plus 7.75 is around 10.25, 10.5%. I've done a lot of those recently, And so it just depends, and it lowers your payment and it extends your term. So even getting into the early teens, guys, it's a bargain right now. And unlike a traditional home mortgage, you guys, don't look at it as like personal finance. Look at it as you're fueling your business. It's your baby, rockabye baby. Put him or her to sleep. Caress. Give them a kiss. I'll see you tomorrow. And just be there and just know that it's something you're going to grow and cherish. When this is plugged in, when you work, guys, on your mindset, and like I said, I'm an entrepreneur. I run other businesses as well. And I was with the meeting earlier trying to figure out some things with venture capitalists. I had a Zoom call. I haven't done those Zoom calls in a while. So I told them, I'm like, I haven't done one of these in some, I haven't had to, I haven't needed to. I have different systems now. But I was very like this. I was very not like methodically and meticulously breaking down things for them. Not speaking fast, like 100 miles an hour. I was listening. I'm a listener. I listen more than I speak. When I'm not here, I'm not speaking. Well, I do. I wouldn't want my significant other or someone else to give me a glaring look or have that thought that, hey, I haven't paid attention to them. I pay attention to people very, very well. And I pause to hear a lot. Good question. No. But I can connect people with, especially if you're doing any kind of tax documentation and you're trying to save anything with like write-offs, of course. That's what a lot of people want to do. Ultimately, that's the goal for a lot of people with business loans and other specific types of loans. But no, I have my own CPAs. I have a few things I'm going to be doing with some of them here soon. But I have connections to them as well. Especially when I'm actually working with a lot of CPAs too who are actually helping me or bringing me people. And they came to me. I didn't really like go to them. Some of them I did. Some of them it worked out. Other ones, they found me. And they said, hey, Michael, I have clients. Can you please help them get funding? And I break them down the process and I help them out. I say, hey, I'll compensate you. So for anybody in here watching, if you guys have clients, I'll take care of you. Don't worry. I'm going to take care of you. I'll take care of your client or clients. And I'll say, here's a range of my funded amount. I'll give you maybe 15 to 22%. It's very reasonable depending on what I get and how much work it took. So it's a very reasonable cause. You are welcome. So yeah, those are low account receivable, collateral-based financing, SBA loans. Of course, EIDL loans. That's what people love, but you're not going to really see that. You have online bank loans, but personal loans, we spoke about that earlier, 6% to about 18%. Online bank loans, 6 to 30%, excuse me. I don't know why my nose is itching, by the way. You guys ever get that? Sometimes it just, like, you probably don't necessarily get to the spot, but it just keeps coming back inside my nostril now. It's kind of weird. But that's where I want to leave it, guys. Anybody else have any questions? Or else I will get going. I got to go on my jog. Yeah, I'm an old man. Or I'm going to exercise in the garage. I'm that way, guys. I'm like, I got to get my workout in to make sure I earn my meal. I want to make sure, even if it's just 20 minutes, you guys probably know this. I'm not doing it to look good. If it comes with it. I'm not genetically built. Look at my dad. Look at us genetically. But I was a Division I soccer player. What does that say? That I wasn't the most athletic, but I had to work on the skills, and I had to do it more than anybody else did every day. But I also had worked on this, not as strongly as I have had for the last 4 to 5 or so years, more 5 to 6. But it's because of this. And I was a center midfield player, so I was one of the hardest positions. I had to look at everything on the field, and I knew where people were before I distributed the ball, before I received anything. I was very methodical, not the fastest, and I wasn't the slowest either, but I was more self-aware of my surroundings and my environment, and I would outplay people with or without the ball. You know, I was always in better position before something came to me. If it ever were to come to me, an outlet here, an outlet there, back here, back there. Here, hold it for 1 second. Only one touch, open up, boom, distribute. Get up and do the attack. Center midfield. I was an attacking center midfield for a very long time. One of the best in my state, if not. And I'm not saying that to sound that way. I did go to California State University, Bakersfield to play. Had a great team. And so now you have some people there who are in the MLS and in other locations playing. So I grew up in that environment, and it was a way for, my dad was in it too. He played in really good forward, really good in California, Orange County, really good. LA Galaxy recruitment and more. But I was born, and not like he was not gonna go in that direction, but it's in a family where played basketball then, and then played soccer, and so I had done some of that myself. I did a track, but I did a few things, and then I played a holding midfielder. So I really realized this when I got to that level, that I enjoyed the holding midfield player. Not so much like in a pivot, I've enjoyed it. Not so much defensively. I was good defensively, believe me. I can hold it. I could get to something before it even occurred. But I was very good at just seeing the open field. Small 1-2 touch here, boom. And then I got to do a long play, or is it open? Is it not? Eliminated. Got to play it here. And so, I was at a time when I was playing in Brazil too. And so I was going to play professionally out there. I was very young. They had a contract lined up for me with Botafogo. And it's when you're young, guys. When you're young, I'm not making a dumb decision. It's just when you're young, you're in a new country, which Brazil, by the way. But things led in different directions, and that life doesn't go on forever. It's a leaf off the tree. I'm a different person than where I was, much stronger, and I don't play as much as I used to. Really don't. Sometimes I'll for an exercise, I'll probably on my own, left foot, and I was both left and right footed. So predominantly right foot, that's my main foot, but I was really good with my left too. So working on both sides. You guys are like, the heck? I mean, I can't do everything out there, of course. I've worked in construction, manufacturing, logistics, financial logistics. I worked in quite a few roles, and I'm only 30. And I've gone through a lot of setbacks, my younger 20s, especially those times. The younger 20s, I was post-academics, university and community. Those were some learning times, and I got to see everything around these. The younger 20s, I was post-academics, university and community. Those were some learning times, and I got to see everything around these different businesses. Believe this or not, but I was in the courier business too. I was doing some dispatch. Eventually I got into the whole helping them with their budgeting and marketing and analysis and all this stuff that I did very well in. Helping with the owner. I was always with the owner or the owners. I got to that point, and I was working at a time financial logistics role for HP, contracting company for HP, one of the biggest, same building. And then I had worked with several of the owners there, contributing, but I didn't get there. It was hard in the beginning. And I was under-promised or over-promised, underutilized, I would say, in times, underappreciated, underpaid, like a majority of us are or were. And it happens. Even if you get paid enough, it's you get overworked. You got to create your own path. I wouldn't say like him. I like that though. That reference you brought up. 2 different playing styles. Of course, he's more longer frame, the legs. He was just very fluid though in his approach with the ball. Without it as well, but when he had the ball, he was very elusive. You wouldn't think that. But all he had to do was move the ball 1 or 2 times and he was out of your way. He could get to the ball faster because he had those longer legs. So that gave him an advantage. But he did all those little things like you would expect that center midfield player to be doing. I would consider it more... I was a Xavi from Barcelona in my earlier days as an attacking midfielder. Kind of that in a combination with an Iniesta. And then a Busquets, those 3. But there's a few other players. Some people would like to kind of say Riquelme, or there's a few other players. I always had great ball control. My touch, my possession, my passing, my shooting, but my touch was the part that separated everything. With the ball, not without the ball. But when that touch would come to me, I would always set it down easily. like without second thoughts. I could have pressure on me, and I knew what to do with it. I knew how to put my body in position to win the ball before the next player would even get around to it. It would frustrate them, because like anybody else, if they had that, the ball would have probably went 3, 4, 5 feet away. For me, it sticks to my foot. I can go and do it now, and I believe it would still happen. Now, I haven't been playing for some time, but when the ball comes to me, I have very good ball control. Okay, everybody, I think that's everything. You guys got to hear more about who I am. Hopefully you guys enjoyed that. I'm very tired. I had to leave here earlier. Appreciate you guys. Thank you for tuning in. If I missed anybody, I do apologize. I want to get through this as fast as possible sometimes. Appreciate you guys. Thank you for the likes as well. The hearts, for the follows. If you shared the room, appreciate you. I don't always ask for that. I forget about it. But like always, please enjoy the rest of your day / Friday, your weekend. And just know this, you got somebody who's genuine in your corner. And somebody's going to stick by you and help you truly get the right type of financing. Ultimately, at the end of the day, help you as a person, develop. That's important for me too. But also helping you as a business owner. Understanding not only how to get funding or get the funding, but how to increase, how to help your profitability. Because these are other things. See, I'm tired. These are other things that I do too, myself and my team. Yes, observe your thoughts. I love it. Exactly it. Yep, observe your thoughts, guys, every one of you. Think things through very carefully. Very, very carefully. So I'm like this sometimes when I speak slow, people have the wrong way of thinking. I'm not slow. He's just spreading his wisdom in a way he wants me to listen. That's who I am. I'm like that doctor prescribing you something who can say things in shorter words and sentences, but it packs that punch, not always up front, but reading between the lines. Okay, guys, appreciate you guys. Thank you, and I'll talk to you.